Many of us know about investing, but do we know about taxes on profit from these investments? Let's find out. Hello, I'm Abhishek Sood from Brainvibe. Today we'll talk about taxes on your investments like mutual funds, stocks, debt funds. Now let's start. There are 5 types of incomes from stock market. One is dividend, second is short-term capital gain, third is long-term capital gain, fourth is intraday, and fifth is future and options. To understand taxation more easily, I'll suggest you to recognize a tax slab from here. You can select a tax slab according to your income. Let's start from first thing, that is dividend. The dividend are most easily to understand in terms of taxation because here tax is applied according to your tax slab rate. Now there is a special feature, like when companies give you dividend, they cut their 7.5% TDS before giving you. So when in the year of end the tax slip comes to you, you can show this tax and get credit of this tax on you. So this is basically tax on dividends. Second is short-term capital gain. Short-term is considered everything above intraday, that is everything above 1 day and below 1 year. In this, tax is applied as 15% directly, irrespective of your tax slab. Here you have to notice that you can adjust your brokerage, your stamp duty, your other charges, but you can't adjust your STT tax here according to income tax department. Third thing is long-term capital gain. Now long-term according to income tax department is everything above short-term capital gain. That is everything above 1 year. It can be 4 years, it can be 100 years also. Now here the tax is implied directly 10%, but the first 1 lakh is exempted from tax. Here also, like short-term capital gain, you can adjust your brokerage, stamp duty and all charges, but you can't adjust your STD tax. One more important thing in short-term capital gain and long-term capital gain is you can't adjust your Chapter 6A redemptions. Now these are like mediclaim, life insurance, PPF fund, etc. Now let's come to fourth, intraday. Intraday is considered as business income according to income tax department. So it is charged according to your tax slab rate. Like if you have 5%, so it will be charged 5% on your income. Now consider you have to add this income to your tax slab chart to find a tax slab rate. Future and options. Future and options is also considered a business income according to income tax department. This is also charged same as your tax slab rate, as I explained you in the intraday. In intraday, it is considered 1 day you have taxed according to your tax slab. But in future and options, if it's 1 day or if it's full series, it is considered as business income and you have to give tax according to your tax slab rate. You can get deductions of Chapter 6A on future and options, which I have discussed earlier. Now, let's talk about mutual funds, debt funds and index funds. Definition of short-term and long-term changes. Everything below 3 years is termed as short-term and everything above 3 years is termed as long-term. So in short-term, here the tax is implied according to your tax slab. Whereas in long-term taxes, there are 2 ways to imply your tax. Like it depends on you. So the first way is direct 10% on your investments. The second way is 20% with indexation. Now what is indexation? Indexation is a ratio fixed with inflation. Now income tax gives this data of indexation on their website. You can choose any of the 2 options. So this was all about taxes on investments. This was all about today's video. If you have learned something, do like this video and share this with your friends. Don't forget to subscribe to Brainvibe and press the bell icon. You can also download our app from the description. If you want to start investing, you need a Demat account. You can open Demat account with our referrals and our team will help you. The links are there in description. Thank you.